Welcome to Trading Lounge and the Asian Report. We'll also cover CBA today as well for the 11th of June. And with the Asx200 here, we've got from the low here from wave 4, we're looking up top here for wave 5 here. And within that, we're looking for a 5-wave structure. So we've got wave 1 and 2 here, and we're looking at wave 3 up here. We've been looking for wave 4, and it still may fold out here as an A wave here, a B wave up here, and a C wave down here. It's still got further to go here, but it certainly can be an A and a B and a C. Otherwise, we need to have this over here as wave 4 here. We may have to do that, but I'm a little bit reluctant to do that because this wave 4 here, this degree of this wave 4 here is 2 degrees smaller, and well, this one here is 1 degree smaller, and this one is bigger than this one, and even this one is bigger than this one. So I'm reluctant to call that wave 4 here, but the US markets are showing that we are getting an impulse wave to the upside. So it's quite possible that we can have this up here as wave 1, back for wave 2, 3, 4, and 5 moving up through here. So one way to look at this is that we can count this move up through here as an impulse. If this is 5 waves up here, then we have to label it wave 1. But it's not quite complete yet as wave 1, as 5 waves. Currently, we can look at it as 3 waves. We can still make it one more new little high here and still be a little ABC up here for a B wave and then come down. So realistically, the good trade within all of this would be this 3rd wave here. So for this 3rd wave to start here, this is the one that we really want to catch, okay? We want to catch it in indices, we want to catch it in stocks as well. And within that, then we definitely need that 5 waves there. The other way to look at this too is that we need to look at this as a classic trading levels pattern. So if I can just move this out of the way, in fact, I'll come over here a little bit. So we could call this the arrival, the reaction, and the first high above the level here. So we could look at it as the arrival, the reaction, the first high above the level, and then a corrective move like this is an ABC here. And then we can look to find different ways to move in for any break to the upside here. So it's not like we're going to miss anything. It's just, in terms of trading, we're not going to miss anything. Just in terms of analysis, it's a little bit sort of tricky. The question is do we follow the US or do we take our own path here in Australia for this? So, and also what would be driving this to the upside here as well. So this is what I also want to have a look at the banks for, because I believe it's the banks that are going to be driving that to the upside. So if we look at this here, just drilling in here now, we can look at it on this chart here, wave 3 here, and look at all of this as an A wave here, and then a B wave up here. It's okay for the B wave to take out the top here, by the way. It just becomes an expanded flat correction. So there's 11 or 12 different types of corrections depending on which Elliottian that you listen to, but in this case here we would look at expanded flat as the move coming up through here, making the top of wave 3 here, the move down here. This move comes up here, takes the top out here, and then it comes down here and takes the bottom out here. It's a bit of a bull and bear trap, as they say, and then a move up through here. So that's an expanded flat. So that's likely to happen. But if this turns into 5 waves here in terms of 1 and 2 here, and we've got a bit more here for 3, 4, and 5 here, and then we'll get an ABC here. If we get 5 waves here, then we know that we're going to get 3 waves here, and then we're going to be pushing up higher from here, and then we can label this here as wave 1 here and wave 2 here, and this would be in line with the US and the European market. So I do believe that's the case. The question is you know, have I made a mistake anywhere in here also? And the only mistake that I can see, as I've mentioned before, is that we have wave 1 here and 2 here and 3 here, and wave 4 here is rather big. So that's a bit of a problem, and it also overlaps wave 1 here. So the mistake would be in here, but then how do we label this then? I mean, do we label this here the A wave here, B wave here, and a C wave over here, and then drag this wave 4 here over to here, which is a possibility. And then wave 5 up through to there, but it doesn't make any difference. We're still left with that wave 3 there. So I'm not quite sure how to approach this. So we just need to wait until things become clear, and clear would be 5 waves to the upside, 3 back, and then moving up. But let's just drill in and have a look at this particular structure here. I've relabeled it a little bit in terms of a 5-wave price action so we can look at it. So I don't know if we've got wave A here or wave 4, but we'd look at this as wave 1, ABC for 2 here, and then 1 and 2 and 3 and 4 here, and then 5 here. So still a way to go here in terms of this wave 4, wave 5, wave 4, wave 5 here, and then an A and a B and a C coming into this space, and then up from here. That's kind of how that would play out here. So yeah, and just on the tick chart here, 100 ticks. Slightly different way of looking. No, it's the same thing, 1 and 2 and 1 and 2, and all of this. So I've changed this here to all of the count's still the same, all the waves, but just larger counts change. 1 and 2 here, 1, 2, 3, 4, and 5 here for the third, the fourth, and the fifth here. So this little 4th wave here, if it plays out, should pull back well to the wave 4 of 1 lesser degree. So from wave 2 here to the top here, this is also a bit truncated here as well, apart from that spike. So the 38.2% retracement levels here, the wave 4 of 1 lesser degree is here, so it can come within any of this space here. So it's probably just an A wave here, B wave here, and a C wave here. If that top gets taken out, then you need to be going long from that point, because we would see another 5 waves up from that point there. So buy new highs, otherwise just chill and work out. If you're going on the hourly chart here, we're just going to hold through these series of wave 4, so I'm just putting the stop out of the way from all of this, and we'll just you have to stay in the trend to make the money, so we want to get higher ground here first. No need in getting out. If you do want to get out, well then taking some part profit here is not such a bad idea. We can always get back in, so I'll just put that there as part profit, and we can buy back in on some of these pullbacks here, so I'll just put that there. It's close enough. Just save that. Also too, the driving factor with all of this, I believe, will be the banks. So the Commonwealth Bank holds most of the index, something like 9% or something. But in terms of Elliott counts, it's got the clearest Elliott count, except for one little structure within this structure here. But in a nutshell, we're looking at wave 1 here and wave 2 here, and wave 3 up here, an A and a B and a C here for wave 4, and then we're moving through up here. Now, as I mentioned, and I've mentioned this before, we've gone over and over this, and what we're going to do is that from wave B here down to wave C here, it doesn't count down very well as 5 waves. We're still 1 wave short. So what I was thinking is that the market may move up to the 80 here, and may even pop its head over there a little bit, and then it could come down for 1 more move here, and then we go up from that point. However, that said, if the 80 here becomes the support, then we know that we're going to be going up over 100. We're going to be going up above wave 3 here. So we can look at 110 or somewhere up that way, maybe even a bit higher. I don't know. We'll have to count the structure as we go up. But that's what we would be looking at that stage. So if the 80 becomes the support, then we'll be going up. And I do believe that we will be going up. This structure down here, I'll just point this out. I mean, I've pointed it out many times before, but just to refresh a little bit. So from wave B up here, just push that out of the way a little bit, and this over here. So we've got this impulse wave down here as 5 waves. So wave 1, wave 2, then wave 1 and 2 here, and 3 and 4 and 5 here. So we're still one wave short. There's different ways of looking at all of this. We can look, yeah, it's just different. There's different ways. I mean, one way would be having wave 1 here, and then having this as an A wave here, a B wave down to here, and a C wave up here for wave 2. So wave 2 could actually sit over here, and then we have 3, 4, and 5, and finish that way. So the thing with this one here, though, is that if this wave 4 here, if that's the case, is starting to overlap this wave 1 here. So we wouldn't see that kind of overlap in this degree of structure. I mean, I have seen it before, but it's very rare. So what I was thinking here, if this wave 4 is correct here, then we would have this as an A wave here, B wave here, and then 5 waves up for a C wave. And the 5 waves up for the C wave here, if I can just use, wrong degree of structure, but if I can just use these here, it would be like this here, 4 and 5 coming into here. So all we would see here would be another little push up into here, and that would be the end of that, and then we would come down from that point. So once we get that first high above this level here after these 5 waves, any move up past that, that means that we're bullish at that point. So we need this structure to finish, and then we can go high from that point. And then we would need to label this here wave 1, wave 2 here, and either wave 3 here or wave 1 of the next degree higher. But support on this one here would play out as being positive. So just on the 4-hour chart here, so we've talked about this before. So the 5 waves up through here, and what we're looking for is a classic trading levels pattern here. So the arrival, the reaction, which is the arrival, the reaction here, the first high above the level here, and then an ABC pattern here. And then if we get support on here, then we can look to go long from this point here. And I do believe that's the case. This has still got higher to go here, but chasing this up here may not be a trap, but normally I'd see it as a trap. So just be a little bit mindful of that. So that's sort of where we are, and the other banks will follow, of course, and we've got the smaller banks. So I was looking at which one's this one here. This is Ben here. So this is the quarterly chart here. I was just looking at the volume, so I can see that we've got good volume from this point here, and then when this is moved back down through here, it's moved back down on a lower volume here. So that means that there's no sellers in this really. So we'll need to see this push higher first. But if we take a look at this bar here and just go into the daily here from this, that's on a yearly basis, this one. So a yearly bar, probably don't look at that very often, but it's a good way to look at the volume in all of these sorts of things. So this is Ben here, and yeah, I mean the main point here that I like is that this move through here, we know that it's on lower volume coming down. I can see that it's reluctant coming down. It's got overlapping wave structures here, so we could even look at that as corrective. That means that we should be taking this top out here for this market. So in opening this up here, I can see that the move up into this space here, if I just get rid of this volume thing here, don't need that. I can see that this is all impulsive through here. It's still got higher to go. The medium level here is next. At this stage, so that's the medium level there. I'll just move this down here. Don't need that volume there. So we will see. There's no point in chasing this either here, and I can see from here we've got 1 and 2 and 3 and 4 here and 5 to go here. So there's still more to go up here. So we could look at this here as the arrival, the reaction from here, and then look to move into this here. I don't know, in a couple of weeks or so, we can look at that. But this move up through here, it can be counted in different ways, but whichever way you look at it, it's impulsive. We would have wave 1 and 2 here. We could have this as 1 and 2 here, and 3 here, and 4 here, and then 1, 2, 3, 4, and 5 finishing here, and then have an A and a B and a C here for that. That's one way of counting it. Another way to count this would be up for 1 and back for 2, up for 1 and back for 2 here, and then the third wave up here, and then a fourth wave here, and then a fifth wave here. So it's whichever way you look at it, it's bullish. So this, when you think about it, there's still a long way for this to go here. So it's likely that this here is just wave 1 here. So it's probably a good idea to lighten up in some of the material sector and move into the finance sector in terms of EFTs and portfolios with shares, so to speak. You know, I mean, we'll do it as CFDs, but you know, holding a CFD for, you know, probably, I don't know, depending on the calculations, up to you know, to 6 weeks or somewhere in that nature, but otherwise you might as well get a margin loan. After that, it would be cheaper than holding that, you know. But yeah, so there we go. All right, we'll have a quick look at Hong Kong and India. So we'll do India first today. So with India, we've been counting 5 waves up here. This is the hourly chart here, and then we've been stopped out of our trade, and we've taken part profit and all the rest of it, so not in there. So we're looking for a correction, and we've got this move down through here. It looks a bit impulsive with a strong third wave in here, but it also can count as corrective as well. So little A wave here, B wave here, and then 5 waves down. So 1 and 2 and 3 and 4 and 5 here. So we can go bullish on this if we get 12,000 as the support, and we don't have that at the moment. This move up through here, we could count this down as an A wave here. This move up here has pretty much gone back up and test supply here, so we can say, you know, the 50, 62% retracement level, whatever. So we still need this to play out. So it doesn't really matter. I'm just not sort of interested in it at this stage. So we can come down here further. And if that's the case, you can take this low out here if you want to short, or we may even push up. But even if we push up here, we're going to be pushing up, and then it's going to come back down again as well. So we've still got, you know, we still need a setup on top of 12,000 here, and we don't have that. So there's no point in doing anything with this market just yet. You know, we should see some type of corrective move come into play here. So this is just the first leg here. It does appear that it's in as an A and a B and a C, even though it looks impulsive. But either way, we can still have a B wave up here and a C wave down through here. So I'm just not interested in trading this just yet. The Hong Kong market is different. So we've been looking down here as wave 1 and 2, and then all the way down here for wave 3 here. So this wave 3 down here can also be wave C down here as well as an ABC, but let's just from there to there. The 38.2% retracement level is still up in this target area here at the 28 here. So that will be our target area to the upside here. This will still have more to play out through here. This is like a little third wave in here, so we've got a fourth and a fifth wave to play out there. If you've been long above this level here, where we probably talked about it with that line through there, then you would need to leave your stop out of the way. So if I take it from, I can see that's 1 and 2 and 3 and 4 there, 5, so doesn't make much sense there. But I'll take it from this one here just to put out the stop out the way. So this is where it can come back to here. at this level here, this little low bar here, so just be mindful of that. So you need to keep, if you want to continue up to the 28 here, you'll need to leave the stop out of the way here. So I mean, the other thing to do is just take some part profit here. So keeping the stop, say there, is really well out of the way, but you can take part profit here if that's going to be a concern for you. And that will it's just everything's about taking the next logical step in my mind. We're all different, we learn in different ways, we see in different ways, but taking the next logical step, trying to find a balanced view on everything, then you don't create a lot of regret and sadness and negativity, but also you don't create a lot of, you know, highs as well in terms of positive, but you basically just running the numbers at that point, and that's basically back to work. That's, I'll leave that there because that's our target area there at the 28, and put that there. If you're taking profit, then that's where you'll take it from, and that will probably, this will probably be in line with the US move up here as well, so you can follow that to the upside there. Alrighty, thanks for tuning in. Cheers.